Good morning, everyone. Welcome to the Euro Trade. I'm your host, Marcus Stalker D. And if you're new here, if you just randomly stumbled across this stream, I've been trading for 18 years, and 12 years out of that, I've been trading for various prop firms as a commodities trader. So I'm not really much of an equities trader. So you might see me looking at precious metals and energies markets and looking at products that are not typically that well represented. Now, I am Series 3 qualified, but I'm not a CTA, so everything you see here is for educational purposes only. Don't know whether Bruno posted the risk disclaimer already, but I'm sure he will do in a minute. So make sure to familiarize yourself with that document. Slurp of coffee before we start staring at the charts. All right, gold at 4,000. Pew, pew, pew. So yeah, it finally happened. Oh my goodness. Now what, right? Well, we're going to have a look at how that looks on the larger time frames first and foremost. So what does that do for the weekly this month? Just keeps pushing it higher and higher and higher. Can we say to the moon? How high can gold go up? Now, whenever I start seeing any headlines around people in journalism going, yeah, gold hits 4,000, is it time to buy? Usually means it's time for a pullback of some sort. So we'll see. But Asia still pushed this into another all-time high overnight. Just about. Just like $1 over 4,000. Let's break down the intraday time frame. I'm just going to kind of scan through the 4-hour chart to make sure that we have the full context. Right now, we're seeing London doing its standard slight reversal. Is that going to last? Well, nobody knows, but let me just look at my value areas and all of that good stuff. The VWAP long on gold yesterday, that worked out pretty well. I did have a position on from 39.52.8 in my personal, because I'm in Serbia at the moment, so I'm not really allowed to trade my live account since Serbia is not one of the approved countries. But yeah, so 39.52.8, and then I just ran it up to just underneath 39.75. But later on, we did hit 4,000, and almost immediately, was this 4,000? No, it was actually just below 4,000. They had a huge sell-off. What time was that? Wouldn't be surprised if that was Euro close, because that's usually what happens. Let's see. Little crosshair. Yeah, so it was right after the Euro close. So there it is, just a huge reversal. Right now, we're hitting the London value high, and it's already gone into a failed auction long. But I will probably sit and wait to see what they want to do with this on VWAP side, because right now we're sitting right below VWAP, and that can be sometimes a decent indication that maybe there's some people looking to book profits around here. But with the way gold has been, I am not going to speculate shorts. I'm just going to observe, see where our GEX levels are, where the average ranges are located, and then make my decision. Average ranges right now are pretty far away. We have the ADR low all the way down at 39.47, which is not, not miles away, but it is far enough. And then to the upside, the first area of interest would be the supply that we created during Asia. So here's that supply sitting right underneath the round number. And actually, if I get an opportunity, I would maybe in this situation, since we're at the round number, right? So it's 4,000. It could be a case of maybe some liquidity grabs and then maybe a little scalp down. And because it's a round number, wouldn't be too opposed to actually scalping that. So some of the things that I want to see if it's going to be a stop run and reverse situation is that upon breaking the range, I want to see a wick, selling wick on the candle, followed by some shorts stepping in to effectively hedge the rally that needs to happen up until that point. The only thing that would keep me out of that is if the volume is consistently growing and if all of the price action in the run up to that are nice green candles. If we start to have a lot of inside bars and if things start to look like they did in sort of in the settlement in this area. Oh, hold on. Was I looking at, that was yesterday's Asia low. Yeah, hold on. So this should be somewhere here. Yeah. So let me just rename this because it's an old level. So Asia overnight low. Yeah, so we're right now sitting underneath the Asia low as well. And the range for Asia low was pretty small. Pretty small. So yeah, does that mean it's time for some shorts? Remains to be seen. Let's have a look at COMEX value. COMEX value low is sitting at 3968.6. COMEX value high is 3989.3. So right now we're inside of that range. If that remains the case, I don't think I can find any really decent trades because anytime the price has been trending up, trending up, trending up, and then one of the days it opens inside value, it means that something's changed, right? So the sentiment on that particular day is not super strong. And yeah. Rikic is saying rodom iz Srbije ili samo posjeti? Rodom iz Srbije. I was born and raised here, but at this point I've lived in London and England longer than I have here. But yeah, I went to school here, so born and raised. Senna is asking, is that a massive mug or do I have small hands? I'm actually really small. I don't know how that people don't really realize. I'm only 5'1" on a good day. So this is a regular size mug. I mean, I don't know whether it's that regular, but I am pretty small. I have long fingers, but I'm a very short woman. So yeah. But thank you for noticing that regular size mugs look massive in my hands. Which market would you suggest I look into today? I usually trade M&Q and MES, but they're at all-time highs. I just don't want to play around with all-time highs. Well, Greg, we're talking about two products here that are nearly constantly at all-time highs. So rather than running away from it, I would try to develop some ways to trade the all-time highs. And the way I cope with it is I look at the average ranges, I look at options chains, because the chain, when you look at the options levels, they typically have levels that are outside of whatever the price action is right now. So even if it's at all-time highs, you will usually have some levels even higher up. And because those levels are heavily used by the market makers to hedge against most trades, they kind of go in the same direction. Let's say you have, I mean, we can have a look at equities, I suppose. Let me grab one of the charts here, and let's look at ES, because I don't like looking at NQ. I think that ES on most days is the benchmark as well. I mean, there are days when they diverge, but that's usually when there's some like earnings and stuff. It's not necessarily on regular days, because in most days you will see the equities heavily correlate to one another. So let's see what ES is doing today. And normally if I'm actively trading DAX, I will actually look at ES. But this week I am visiting my mom, so obviously I want to stay in my lane with the products that I normally trade. And that makes everything a little bit better. I mean, whenever people are asking me what do I look at, I would say gold, but since you're saying that you have trouble trading around the all-time highs, gold is also at the all-time highs, so that's not going to solve much. Maybe look at RBOB, energy markets. Just know that there are no micros in there, and RBOB is $4.20 per tick, and it can move about 500-600 ticks in a day. So again, is that an appropriate thing? It's a very tricky product anyways, and generally equities traders are not really keen on energies because they're so challenging to trade. Every time I tell people, you know, I trade energies, they're like, how can you trade that? And maybe they're talking about crude oil now, but you look at RBOB and it's a very, very sweet product, for me at least. But you do need to be super objective with the price action, and you need to have a pretty robust way of looking at the market. Yeah, I don't know what else I can. Maybe natural gas, that's got a micro. So even if you make some mistakes, it's not going to hurt you whilst you're learning. But again, even natural gas has seasonality to it. I don't know. I don't know, Greg. Everything seems to be either at all-time highs, or you would need to spend a significant amount of time learning. But yeah, let's maybe just tackle, you know, the problem of trading something at the all-time highs. That can be maybe a little topic for the day. Right, so equities. So if I look at ES, it's kind of flirting with the gamma flip level, which is currently sitting at 67.80. Not much in the way to stop the prices rising yet again, and there are some people sitting around 6,800. That's where the gamma wall is. That wouldn't be an all-time new high, but it will be a retest of the level that we were at. And actually, you know, this is how these levels work. The 6,800 has been in play for quite a while, and it's been a core resistance and a gamma wall for a long time. So if we go back in time to see how the prices reacted, I mean, it hit it to the tick, and that's pretty much where it started. This is exactly why I look at these levels, because, you know, even if you have nothing else at that point, at least you will have, you know, a level with high open interest. And then if I look above to see where the other smaller open interest levels are, but still significant, we have GEX 3 at 68.10, then we have GEX 1 at 68.25, all the way up there. So, you know, to me, in a very bullish product, and a very, sorry about that, very bullish product and very, you know, strong uptrend that keeps going into all-time highs, to me, those levels will be game. And this core resistance will be nothing more on the second test than just like a partial stopping point, like a traffic light, before they go higher. And then the same level, once broken, really only becomes another new support. So it's sort of like a continuation. And then I would maybe look to grab like at least 10 points up to the next GEX level. And that's when I think we would be all-time highs at that point. But you will be using the options chain and the market maker activity to keep going. So it's like, oh, who's buying here? Well, it's once we go over these levels, it's going to be the market makers who are buying, right? And if you are maybe in a negative gamma environment, these levels can just get run through as if they're not even there. So, however, I think equities are still in positive gamma, which means that there's probably going to be some stopping points on the way. But do I expect equities to suddenly roll over? Not for any extended length of time, right? So maybe if you develop something like that, you know, I like to look at the strength of the auction on the day as well. So for example, let me see if I can find the ES chart, show you the profile. And, you know, the levels. Let me just load a template here. Let me find the template. Hold on. I don't think I have a very good template for equities here. Yeah, I'm gonna have to change a few things because I have a template for metals, but those are different times. Let me just adjust that quickly. Because obviously equities, like I said, are not my main thing. All right, let's have a look. So how are the auctions doing? Let me switch off the standard deviations from VWAP as well. Just to clean up the chart a little bit. So how did we do yesterday? So one big sell-off on what was an inside day. Then they pretty much stopped. They pretty much stopped moving very close to value low. They didn't even reach settlement, the blue line is settlement. And then they turned it around for the post-NY cut and carried on, taking out this single print that was left in A period. So A period TPO is the first half hour of trading. So that was just chewed up. Then we extended the initial balance. The extensions are blue. Had a little bit of a stopping point when, what was the time? Yeah, so a little bit of a stopping point right after the EU close. Slight push higher, and then towards the end of the day, a little reversal. And that was the entire day. So very, very typical. No strong auctions, but they still showed up, right? So the buyers were still very, very present. Apart from that first half hour that had a head fake. And at this point, ES is kind of looking like he's doing these head fakes in the first half hour of the open. So yeah, maybe consider looking at some levels that have some true meaning rather than just, you know, measured moves or something. Because the options levels, they are open interest at those points. So, you know, there's a price action and volume reason why you would consider them as interesting areas. So yeah. And then the general open interest, what is the crime is saying open interest might be an indicator. So we're talking about two different types. So open interest in the options chain is just options that are just sat there in case that the price kind of reaches there, right? But then you have the actual open interest for the entire contract, which is calculated at the end of the day, and you can see that on the CME website directly. So Hogue looks at that, and Hogue does ESGC and crude oil open interest analysis every single day on the opening call. So make sure that you watch that, right? I don't know how many of you are like, you know, missing out on the opening call, but it's a very, very useful way to look at the market. I personally don't track open interest as much as he does. So if I want to know what's happening, I will actually reach out to Hogue and I will be like, hey, what do you think of, you know, gold? What's open interest doing? You know, the beauty of having colleagues who are specialized in different things is that you can just reach out to them. So, you know, you can ask them, hey, what are you seeing here? If I was looking at volume, just generally, I would be reaching out to Coach Jay, you know, because he's our volume specialist. So we all kind of have our little niches. All right, let me just have a look at this word. So yeah. But let's get back to my, you know, to my gold. So it's currently sitting, like I said, sitting underneath the Asia low. Kind of a conflicting information at the moment on gold because we are bouncing from the value high for London, but then we've already went outside of the Asia range. So to me, that means wait, because you don't actually have a full picture here. And this could be a very early indicator that we might have a little bit of a breather, but I'm not, you know, I'm not kind of banking on that happening today. Maybe tomorrow, like tomorrow we have FOMC, but it's just the minutes. It's not the rate decision. So that's a little bit different. So yeah. Greg, are you from around these parts? Since you're using Cyrillic letters and saying thank you. You're very welcome. Nemanachem. So yeah. Right, let's have a look at something else. Let's have a look at copper. Copper had a really boring day yesterday. Glad I didn't get involved in that. But at the same time, ADR low was reactive. So I will show you how that looked as well, rather than drawing everything. Because I'm on a laptop, I forgot to bring my mouse. So therefore I'm battling the trackpad over here. Usually I have a mouse. So if I go back in time, we have the ADR low. That was at 501.80 yesterday. And then there was a value low up at 4, was that from yesterday or from today? Yeah, so 506.57. And pre-market, so LME effectively was already trying to get out of that, and LME did touch the value low, and then they continued straight to ADR low, nice bounce back up to almost value low, and then another run through. But the whole day was a non-trend day because we stayed very contained in a sort of a D shape, very kind of evenly distributed day. Distributed. Making up words here. So what does that do for the daily chart? Let's have a look. So the daily chart, it meant that we have a little bit of an inside bar. Is this going to put a wrench in the works for my continuation logs? Probably not. Like whenever I see something like this happening and it doesn't really break any structures on the larger time frames, it's just a breather before further upside. So, you know, I'm going to, again, stay very patient. I don't think I'm going to be having an opportunity for an early trade today with the way things are looking right now. You know, yesterday was a little bit different because we did have that Asia low, and then I was able to grab a few takes on the upside. Right, Greg says translate to wrap. Okay, okay. Google Translate. So let's have a look at the 4-hour chart. So Asia high is now all the way up there. Again, a very small range. Very small range. Actually, is that right? No, that was yesterday's high. Yeah, so this is why I need to stay on the 30-minute chart. Because you start confusing things. Okay, so here we go. So the Asia low. What time zone is this? Oh, it is the UK one. Okay. Yeah, I would consider this squiggle down like an overnight low as well. At the moment, we're still teasing the same GEX2 level. So GEX2 has not moved since yesterday. It's exactly the same point. So I would be saying that this is the overnight low. You can call it Asia low, overnight low, whichever one you wish, but it is the same thing. So kind of in the middle, with GEX2 right now causing a consolidation. So we've fallen down and we're not so far going any further. Now looking at the value areas for COMEX specifically, we're sitting right above it. So to me, if anything, copper actually looks a little better technically than gold. Gold may just kind of continue lower, but if we continue to float above value high for COMEX and GEX2, to me that would be a bullish signal, and then I will be looking to somehow get in on that. VWAP is pretty flat at the moment, so that's not much of an indicator on copper. And you know, copper can have super slow days, and then sometimes it just goes absolutely insane and just goes in one direction. Yeah. Nasdaq saying passing through to drop a like. Thank you so much. Great to see you here, and wishing us all a profitable day. Thank you. Yeah, so let's have a look at ADRs just to know where we are, what range we're working with. So the top of the range on copper would be up at 513.50. ADR high and ADR low would be 499. So maybe we can put those in since I might be getting involved in copper today. 499. And then a dash line and text, already that. Here, high, what did I say? It's up at 513.50. There we go. I'm gonna make that red. I see red, red. It's too early in the morning for singing. Love the morning voice. All right, so that is the range, you know. and then very, very small COMEX value. So if anything, I would not be doing like value acceptance in case we start to go lower. I would be looking for the price to actually completely obliterate that and go much lower. And then maybe try and swipe a little sustained auction lower into the ADR low. If that doesn't happen, I would probably stay out. The second hypo for the longs, continuation, which would match the higher time frames, would be that we don't do much and we literally stayed contained in this previously massive candle that we had for the London Open. We stick above GEX2 level at 505 and then eventually start moving towards the ADR high. So that would be the most ideal situation. But yeah, what is ADR? ADR is average daily range, which is a quantitative extreme. It basically represents the amount of average movement that a product has had over the previous 10 to 14 days. And once that area is reached, look at it as a kind of like an exhaustion point. But it has a twofold function. It's not just like, oh, we reached ADR high, let's go short. Sometimes you can have the prices reaching the full range and then just fizzling out, like literally just it dies. Or on some days, if you have outlier days, meaning that there's some news or release that everybody's waiting for, maybe it's the end of the month or the beginning of the month, and then suddenly you have these single direction days that just ignore all statistical measures and keep going. And on those days, if something ignores ADR and goes higher or lower, it will basically mean that we are looking at an unusual day. So it's a twofold function, the way I look at it. But on most days, you will expect the prices to just kind of tag ADR and either reverse or just to fizzle out. So there's the high frequency of occurrence of that happening. Johnny is saying good morning, good morning, good morning. Yeah, so copper in an interesting situation, very interesting for me. Let's have a look at the energies. So I'm going to change GC here to crude oil, because whenever I'm doing analysis on RBOB, them two are heavily connected. So it's not like they're isolated. It's kind of like, I suppose the most similar product would be NQ and ES, because a lot of the days they will be similar, but there are certain differences to them. However, CL, RBOB, and heating oil, all three of them have a very, very big connection, because RBOB is actually a derivative product that is made from crude oil. So they're like very, very, very closely connected. However, when you look at RBOB, it's kind of like the old crude oil. When we roll back the clock maybe like 5-10 years ago, crude oil was the one who had 300-400 bucks a day, 300 to 400 ticks per day, which is like $3 to $4 a day. Whereas now RBOB is the one with that sort of a range, and crude oil is just a snooze fest on a lot of the days. I remained short biased on energy, so let's have a little gander at the weeklies. And you will see why. Let's make this a little bigger. So yeah, range, and a range. More ranges. So I have the bearish engulfing on the weekly chart. So basically a new supply being created. And it is an offspring supply because we touched another sell-off point previously. Same thing happened. It's been tested multiple times, but every time you have a range, you expect that, right? You expect the areas to be tested over and over and to keep reacting until the range is broken. So very short biased on the weekly still. So therefore, if there are opportunities for any decent shorts, that would be my first sign. I only long energies if there's nothing else going on and I'm towards the end of the day and I'm thinking, well, let's do a little long scalp into settlement. That is the only time. Because every time I was long crude oil throughout the last 13 years that I've been trading crude oil, it's always painful. Like holding longs takes forever, right? to reach a target. So literally what should be a 45-minute trade ends up taking 4 hours. And yet on the short side, you go into an energies market and your target, the same ticks, same everything, your target is reached within like 10 to 30 minutes flat. So that tells you of the strength of the trend. Now, I have the luxury of having the 13 years of experience trading these products. So to me, I just stopped looking for active longs early in the session in particular. If there is an opportunity to fade them, and everything is telling me, yes, fade now, maybe into the euro close or something, I will be short energies. Apart from that, I would be looking at it turning around a value high and going into a bit of an uptrend. And I'm just thinking, where do we sell this? Because it's the energies, right? Unless the world is coming down, there's some kind of a war or a threat to the supplies or anything, like energies are just either stable or they fall, you know. Let me have a look. Greg says, how do you determine where to put the ADR high and low? It's a measure, right? It's a calculation, but it is a dynamic measure in the way I do it. So I start with half up and half down at Globex Open. But then as the price makes a high and a low, my indicator tracks that. So until one side exhausts the average number, the exhaustion has not happened. So it's not a simple measure as, oh, put it high and low or from a Globex Open and you're done. It's almost like a volatility band that tracks the developments intraday. And that's why it's a little bit trickier, and that's why most people were not able to replicate what we've done, because we have our own like proprietary code of how we do that. But that's kind of the gist of it. It's not the end of it, because I also have like a little bit of a special weighted average in there, just so that if you have a market increase or decrease in volatility, that it doesn't take like 2 weeks for that to show up in the actual average. So yeah, there's more to it. Like I said, it's a proprietary way of us combining my experience and then us just kind of working to code that up. So yeah. What is the crime is saying is the difference between gamma exposure 1 and GEX2, a standard deviation between the two. Not quite. So GEX1 and GEX2 can be at very random points, and they're not calculations, they're taken purely from the options positioning. So it's an open interest where people would like to either, enter the new positions, or where some people are looking to maybe run some sort of a spread, or, maybe sell a call, buy a call. You obviously don't exactly know everything that they can do or that they want to do, but you know that calls are, for example, on ES concentrated around 6,800. So, sometimes if the price is too far away from it, you can actually put a limit order for the option to fill when the price actually gets there, because you want to save money. Otherwise, if you buy a heavily in the money option, that gets really expensive. So I don't know why anybody would be doing that. But yeah, it's going to be open interest for people who want to do something at those levels. And then same thing with GEX1 and 2. They just have a smaller concentration of orders there, but they are not standard deviations. They're just levels where people want to get involved in the options chain. So yeah, they're not being calculated by projecting levels from the current price. That's not the same thing, right? And that's why they're so much more valuable, because real people sitting there. It's almost like a version of order flow, but from the options market. So yeah. Jeremiah says, hi everyone, and Dee, I'm new here and a hatchling in trading. That's a lovely way to put it. I'm a hatchling in trading. Specifically Forex. Okay, I don't know why Forex, but yeah. Once profitable, I would do what you do, streaming to help the beginners, me, which I still am. But why do you stream? I stream because trading gets very lonely. That's number one. I stream because I have a chronic illness and I can't really go out. So this is my social. You guys are, that's all I get. Every so often I travel to see my mom, but it's extremely difficult for me to have any sort of life. Obviously, I have my 8 dogs and I have my husband in England. But yeah, I don't really go out much and bit of a recluse at this point. So yeah, actually when I was really sick, really sick, I couldn't even trade because I was light sensitive. So I couldn't even look at anything. But then I found some novel protocol that sort of got me out of bed. Otherwise, I was spending a lot of time in bed. And around about that time, I kind of felt a little bit uncertain about myself and my health. And Hogue reached out to me and he said, well, we're starting this TopstepTV thing. And I've always enjoyed this interaction. I used to be a musician. I don't know how many people know that. I mean, I suppose those of you who know me, you know. I was a session musician for 20 years before I went into finance. And then I went into prop really seriously in 2013 and never really looked back. But I've always had this side of me that yearned for some sort of an entertainment side of things, because I love to present things and I like to help people as well. I was I did music teaching at one point, not for very long, but before my session career took off, I did teach music as well. And then I don't know, I just always had this desire to be on screen and to do something in more of a public eye, I suppose. But yeah, so at the time when Topstep approached me, when Hogue said to me, hey, what's happening? We were all really bummed that Squawk Radio stopped being a thing. So we were all a part of Squawk Radio back in the day. I've been involved with Topstep in some shape or form since 2015. I was their first female funded trader. And they did a couple of interviews with me and they found me interesting enough and talkative enough to get me involved in Squawk Radio. So I didn't have a show like I do now, but back then I was more of a guest and I was on there pretty bloody frequently. That's how I managed to get to know everybody. And back in the day, MP was calling himself Nebraska. That was his username. And we all had like different usernames and stuff. So we weren't going by our real names. I think Hogue still was, though, and Eddie. But yeah, the rest of us had some weird usernames. Yeah, and then that shut down, and we were all super sad. We were like, oh my God, what are we going to do now? Because, as a trader, you sit there in a room by yourself. Nobody understands what you're doing, and there's nobody to talk to. And I love talking shop. I absolutely love talking charts. I love talking through profile. But, you try and say anything of this sort to a regular person, they would just be like, great. I still have no idea what you do, really. You're like, oh, I can't even share, whether it's a good day or bad day. I can't share that with anyone because all they would want to know is like, oh yeah, did you make money or lose money? And I'm like, no, I want to talk through the setup. Like let's say yesterday the VWAP bounced from gold. If I say that to anybody else, I'm like, mate, I did an amazing VWAP long from all the way from it's already at all-time highs. It's very difficult, but VWAP gave a beautiful bounce and I got like 2.7 R from it. And they would just be like, you're strange. You're a strange creature. So with me, I wanted to share what I was doing because I know a lot of people struggle as well. They're like, well, how do we do this? And even when I was in a prop firm, there would be like 12 people around me and I would be explaining the setup that I was doing. And I loved that. It was like, oh my God, I get to share my knowledge as well. And at this point, because of, everything going remotely, and then I have my health condition and everything, when Hogue said, hey, you want to be a part of this? And I was like, well, I don't know if my energy levels are going to hang strong enough to be able to do that. So we tried it. And initially I was just on like twice a week for fast markets. But then over time, my health condition got a little bit better because I found ways to deal with it. And then I kind of, I don't know, I just thought to myself, actually, I think I can handle near daily streams. But notice that I only do it from Monday to Thursday. There's a reason for that, because towards the end of the week, I still get very tired. And at the moment, I'm still not quite at the point where I'll be able to do like twice a day streams, running the stream by myself, and then doing that 5 days a week, because I would very, very quickly be in the dark room with light sensitivity and just basically right back where I started. I don't want to do that. So at the moment, we're just running the Euro trade. Sometimes I'm on the main broadcast, you know, dotted around different segments. But generally, this kind of suits everybody to still have the overnight programming and to still have guests who kind of pop in every so often. But yeah, they, you know, after about, was it a year or something, they asked me if I wanted to have my own show. And I was like, that would be great. Now, back then, we were supposed to have DAX. That never really came true. So now we will be having some changes upcoming, but don't ask me when, because we're still trying to work on that. But yeah, that's the reason. You know, it gets lonely. I like to share my knowledge, and you are my peeps. And I'm used to be a musician, so I crave the stage. Lyda says, Dee was an amazing guitar player. Hey, probably still am, mate. What do you mean was? There are videos of her playing, yeah. Yeah, there are videos on YouTube. Santa says, sweet Jesus, my Sheba is just rolled in something unspeakable. Oh yeah, the Ude Fox, as we like to call it. Oh, Lyda, scary dream. Oh, bless. Yeah. Greg says, you need to trade your dogs to trade. I'd watch that show every day. I can probably train them to press buy or sell button. Whether that's going to be anything of use, I'm not sure. But my big Bernard, he already knows how to speak. He puts like 3-word sentences together, and they're not like full grammar and stuff. Obviously, they're more like a non-verbal communicator. So he goes every time I'm cleaning the kitchen or something, and I'm just pottering around the house. Pottering, that's such a good word. He just goes, come, sofa, now. And I'm like, oh. And he's like, what are you doing over there? Come here, come, sit next to me. So he's a big cuddle baby, but he's also very talkative. I know he can sort of count as well, because they always go to doggy daycare on Fridays. And he always asks, like, on Thursdays, doggy school? And then looks at you. So if somebody told me I was going to have a half-talking dog a few years ago, that would be crazy. But yeah, I'm not sure you would be understanding the complexities of the context and human psychology that is being printed on top of the subtext that we have in the markets when it comes to price action and relevance. But he can tell you whether he thinks it's a buy or sell. Maybe we can see how that works. No, I need to, so just reading comments. I need to fix my pickups on my Flying Jackson V, but I'm terrible at soldering and already screwed up. I'm too scared to go to my local instrument dealer to fix it. I mean, my dad used to do a lot of messing around with his pickups, and he even changed like all the magnets and stuff at one point on one of his guitars. But yeah, he was a bit of a, how would I say it? He knew everything about everything, and electrics was, you know, a huge thing. And then I think he built his first guitar as well. But don't be scared to go to the local guys. You know, that's what they're there for. Just say, hey, try to change the pickups. Kind of messed up. Please help. So yeah, don't be afraid. That's what they're there for. Instrument maintenance, right? If you want something, just delegate. Delegate. We don't have to. I don't know why some people are so obsessed that they have to do all of their own guitar maintenance. Like for all of my instruments, I always had somebody, because I play sax and guitar. You know, I'm not going to be, if I'm like looking to do a proper clean of the saxophone, I'm not going to be the one messing around getting all of the keys off by myself, because I know what would happen. I would lose the screws. I would forget which key goes where. So, you know, they're complex instruments. So just go and say what you've done, and they'll be able to fix it. Whereas the crime says there was a pit squawk called Topstep directly for the S&P pit. Danny something did the news, and the pit callers' names escape me. So when MP first started Topstep, they were doing the Topstep squawk radio from the pit. So it was Eddie with a laptop and a little earpiece and a microphone. That's how it started. So maybe that was the same thing, because they were doing that from the pit. And it was literally Eddie and MP. And then I think Andre and Hogue then came in soon after. Infinite Fracture, do I play guitar? Yes. I've been a musician since I was 4 years old. And I started playing professionally when I was 14 in 1994. So a long, long time. Jeremiah says, also, Dee, when you were reading my earlier questions, I caught that you said, why Forex? I typically trade the Forex market, if I may. What's your point of view? So, Jeremiah, I started as a Forex trader back in 2007. And for 5 years, that's all I did, swing traded Euro USD. And then we had the European austerity measures, we had the credit crunch and a whole bunch of stuff, and Forex died a death. It never really properly came back. Maybe recently with the, some of the interest rate changes, that momentum might be slowly, ever so slowly creeping back in. But let me just see where the ranges are right now for Forex. Oh, for Christ's sakes, what am I doing here? Keep trying to change the screens and it keeps coming back on me. But yeah, I'm trying to grab... I always forget 6E. Is it 6E? Because I want to see the data. I'm not even sure I have Forex symbols enabled yet. So let me just do that first. Let's see, where is it? Euro, Euro, Euro. EU6, okay. But are we in December? We should be. And I've got CQG, CQG symbols over here, so yeah, Z5, Z25. There we go. Right, I should be able to do this now. Loaded it up, but one other thing that I need to do is, so that I don't have to do the template from the beginning, I do need to create a template. That would be helpful. Okay, so this is Euro futures. All right, now we're going to have all of our lovely data points to reference. Pop out the chart, drag it in here. Yeah, so to me, this is still a total snooze fest. If we have a look at the ranges, barely sitting at 114. But if you look at the individual sessions, all of them have below 100 ticks. I don't trade anything that is under about 150, ideally 180 ticks. So if you look at even copper that's considered like slow-ish, you look at the New York session, it's 173 with the overall average range for the full 24 hours over 200. Even London, which is again quieter, it's 136. So, and then you look at the session and you think, wow, this was a nice move. And then you measure it and you realize the entirety of this is basically 50 ticks. Now, when I see something that goes into a bit of a downtrend, this to me needs to have at least 100 to 120 ticks. So basically to have 35 ticks for a reversal or a follow through, and then to have yet another 70 to 100 ticks further out. If you don't have that, you're going to be stuck in a lot of days where you need to really nitpick on the stop losses. And the way I trade, I absolutely need, for my own sanity, I need to have 150 to 200 ticks of average range nearly every single day as a standard. If I don't have that, my mental triggers start coming up. And on the days when, for example, we don't really have much movement, so again, you only get, let's measure how much this is moving. Again, what is this? Barely 48 ticks of movement. And yet it looks like it's a nice uptrend, right? So to me, it does my head in, because every time something slows down to that degree, I don't do very well. And it's just because my way of trading, I'm more of a mean reversion trader that looks for bigger chunks of the move to happen. And then every so often, once in a blue moon, you might get, a bigger move that just kind of keeps going. So here you have whoopee, 100 ticks. And to me, this just reminds me of crude oil. And I've moved away from crude oil for the same reason. It only has about 100 ticks range every day. So by the time, and the trouble with instruments that don't really have too much of a range, you're still prone to wicks that come out of nowhere because they're effectively liquidity pops. And then you can't really trade them with like 10 or 15 ticks, whether it's the spread or like you trade Forex. So I can imagine that you still have some sort of a spread. Now in futures, for the most part, you don't have a spread at all. Maybe if it's something super illiquid and you're trading at a weird time of the day when it's not the regular trading hours. But Forex has so many issues. They're sort of regulated, but they're not standardized contracts. So you go to one person, one broker, they will have a spread of 1 pip. Then you go to another one and they claim they have something else, but then you look at it and it's 3 pips for a spread. It's like, you will never get that in futures because they're standardized contracts. And the spread, the difference between bid and ask, doesn't come from a broker. It comes from the CME exchange. So if anything happens also in Forex, especially over in England, you're only ever protected for £50,000, no matter how much money you have in there. So me putting any significant amounts of money in a Forex brokerage is never going to happen. Not these days anyways. So we stick with futures because it's regulated. Even if a brokerage goes bust, they just transfer it over to whoever takes on the firm. So it's like literally just so seamless. You, from an end user point of view, you wouldn't even know that that's happened. So it's all super regulated, very safe. Not like safe in like, oh, you can't lose money. You can. Obviously, it's futures and you can lose more money than you've invested as well. But from the standard of you doing everything that you should be doing as a trader, you don't have all of these extra things that make trading much more difficult. It's already difficult to find a good good level, right? And what's the context of the day. And then just to add like additional nonsense spread into that, to me, that just doesn't make much sense, especially if you're talking intraday trading. So I went into futures in 2013, never really looked back. Every time I look at Forex, even Forex futures, to me, they're too slow. And until we have a huge differential between the interest rates of the countries in question, and everybody stops raising interest rates at the same time, and then, stops dropping them at the same time, you need that differential in order to create the underlying momentum. So until sort of the carry trade comes back, and it briefly came back in, I think it was yen pairs last year. Don't think it lasted. But then you had the Aussie yen trade as well. That was a thing. That doesn't exist anymore. So, it's just not really the market that I would be trading at all. Every time I look at it, I just go, vom. Where's the bucket? But, if you're looking for super small chunks, you're happy grabbing 10, 15 ticks, maybe that's okay. Shay says, morning Dee, better late than never. Hello, hello. Oh, Sandy's joined us. Hello. Down the road. Yeah. Desmond said, Dee, good morning. Out of interest, what do you wish to see before you trade GC this time? It's had a good move so far, 200 ticks. So let's go back to GC. So here's the thing. I work in stats, right? And if I cannot have the time of day consistently giving me the same behavior, I'm really not going to have it. I really don't want to get involved. So the problem with this time of the day is that today it's kind of moving, right? But it's bullish, and to me, it was sitting below the overnight low. It was sitting below VWAP. We have a super strong uptrend. So what am I going to do with it? Just blindly buy it when I have very few references for it? So at this time of the day, I actually don't like to trade gold. This is why we're trying to eventually change the time of this. This was supposed to be the DAX segment. I don't know how long you've been here, but that was the whole idea. And we started it with the intention to bring DAX, and then other things sort of took over, and they had some troubles implementing it. And then other things came into, they were working on risk settings. They were working on some other features that many people requested. But they did bring me RBOB, and they did, because they didn't have RBOB either, and heating oil and platinum. So they did tell me, what sort of products do you want? And I was like, well, give me precious metals and give me some of these odd energies markets so that I can trade them. So they did do that, but obviously DAX is still causing them a little bit of trouble, and it will come, but bear in mind that whenever you're making these sort of platforms, there is a lead time of about 5 years to properly sort them. But MP is a visionary, and the way he does things, he just starts things and then he calls it building a plane in the air. And it's very much so. So, just bear with us. But yeah, so we kind of had a chat, and there are some plans that we were supposed to do the time change to basically cover LME. That will still come. We just need to sort out a couple of things with the paperwork, and just to make sure everybody has their, T's crossed and I's dotted, as they say. So yeah, it will eventually move closer to LME, like I did a couple of days just for like a little test, just not now. So at this time of the day, I find that the movement of gold is actually not occurring frequently enough. So if you look at gold for this time period, for London Open and then 2 hours in the lead up to LME, you have this dead period that on most days gold just consolidates completely. So let me show you what I mean. So today we have some movement. What happened yesterday around the same area? Here we go, 9 o'clock. That's about the time when I start. What do we have for 2 hours? Nothing. Dojis printing sideways. Then it all starts coming alive again as the LME opens. So we have a little fake out. That's normal. So head fake for the LME open. Then it turns around. COMEX then massively increases the volume that comes in, and they continue it until Euro close. Then what do you have? You have a squiggle down. So that thing that I explained, most of the days are quiet for the actual London Open. Then you have LME head fake. Then you have whatever COMEX does. And then eventually a turnaround for the Euro close. Those are high occurring things that happen every single day, right? Nearly every single day. If you take the last 5 years into consideration, you will find that pattern. That's how I like to look at the overall structure of the market. What is the time of day? How does this move? And what happens most frequently? That's what happens. So if I then go back, let's see, going back to the previous day, here we go, 9 o'clock. What do you have? You know, this is not me kind of going, oh yeah, well, D says it doesn't move. You can see it, right? This is around about the time when I start streaming. 1, 2, 3, 4, 4.5 hours of nothing, right? So this is why I'm not too keen to trade gold for this time. Gold trades during Asia. Then there's a dead period for the London Open. Then LME opens, London Metal Exchange. And then COMEX. So really, this time period is no good for anything apart from DAX. DAX considers 7 a.m. actually the start of Eurex. Then London opens with more volume and everything goes nuts. So, you know, if I show you DAX for the same time period, don't know whether I have it set up here, but I do have it on TradingView. So let's just grab that quickly. And I don't have all of my fancy tools on there. I just have my basic price action. So if you then compare how DAX futures operate, and let's do the 30-minute time frame because we can tell what's going on better. This is 7 a.m. So this is Eurex. This is London Open. So immediately there's a ton of movement. And by the time that you get to about 9:30, when I start trading, usually there's this fade. This tends to happen. So usually this is my time to basically do like a failed auction long on DAX. And that's what I've been doing for the last 7 years at this time of the day. And then if you kind of go back to see how often DAX moves for London, you will notice, here we are, London Open, smash, 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 and then we get to sort of like 11, 12 o'clock my time, and you have this reversal, sort of like everything is going into a little bit of a fade. But on this day, it was definitely a turnaround, some unwinding of positions or whatever. It was a Friday as well, not too unusual to have Fridays going the opposite direction to the rest of the week. Then let's go back to the previous time of day. Here we are. So London opens, immediate breakout to the upside. I think there was some kind of a release here. And then what happens in and around 9:30? There was a sell-off and then consolidation, yet another sell-off. So there's about last time I checked this, I think there was about a 67% chance that DAX is going to do a fade of the move 90 minutes into the London session. And that's been the strategy that I've used. So, you know, I've always been somebody who trades according to the statistical relevance of the events for that particular product and not when I want to trade it, right? So there are certain times of the day where I just have to be here. So what do I want to see for this time of the day in gold? Absolutely nothing. But what do I see? What do I want to see for the LME and COMEX? That's another thing. So now that we have another reference overnight low, I would want to see that we test, maybe retest of the value high, but I would also like to stay above the value high rather than go into an acceptance. Maybe a little wick as a liquidity grab below this newly established London low. So that's also a play that I like to do for COMEX. And then maybe get in another long. If I miss all of that and we get to the euro close, there is a possibility that if we are hanging around 4,000 still and we do a little wick through it, then we come back into the range. It could be a scalp fade into the euro close. Why a scalp? And what is a scalp for D? It's about 50 to 70 ticks on gold. Normally I like to catch 160 to 200 because it has that sort of a range. So it's a lot of ticks on a smaller size, something I've always done. But if we are coming up to a euro close, we're still hanging around 4,000. We do a liquidity stop run in reverse. There is a chance that I will fade gold into the London close, excuse me, and then grab my 50 ticks and be out. So that's kind of how I trade. So time of day, statistical relevance, assumption and expectation of what we need to happen, level, price action, tape. So yeah. How to get data in DOM. I'm in TopstepX. DOM is empty. That's because you have to pay for it. It's called level 2 data. It comes directly from the exchange. So it's not Topstep charging you for it. I know it goes via Topstep, but they literally just pass those fees along to the CME. So it is $39 per month. So it is a cost. But if you want to start including order flow, I'm sorry, I have to clear my throat. This is really annoying. Excuse me. Hopefully the frogs in my throat will be on. Yeah, so if you want to do that, there is the billing section and it says level 2, add level 2 data or something along those lines. And I don't know, I can't remember anymore. I was on the old dashboard when I bought that. And that's just like on a, on a yearly, on a monthly rollover. So, so yeah, there should be an area somewhere that says level 2 data. And then once you purchase that, now be mindful that if you're purchasing it now, they will still renew at the first of the month because that's just how the exchanges do data. It's not like, oh, I bought it on the 7th, so it's going to renew on the 7th. No, even if you buy it on the 29th, they will still charge you again on the 1st. So just be careful of that. Does DAX always have such big candles? Yeah, generally on a 30-minute and wicks. Yeah, DAX can be a little bit wicky. But the difference between DAX and NASDAQ is that once DAX decides, like let's say you've been watching a 15-minute time frame and we're coming into like the 7 or 8 minute of the candle, if it's red and if it has a selling wick, it will very rarely do like a complete 180 turnaround and suddenly become a green candle in 3.5 seconds. So that's not DAX. Maybe if there's a release, yes, but on average, DAX is just really smooth. So by the time that you've been watching a 15-minute candle of a particular color, the likelihood is that that color will stay until the end of that, that move, and then you will get a fall through as well. It's a beautiful product because I gravitate towards products that are liquid but are not insane intra-candle. There's no, seizure-inducing activity when you're watching it, unlike NASDAQ. And this is the main, this is the main time for the product. So if you look at how the price action is, a lot of ticks, so usually DAX has at least 250, 300 ticks of a range. But when you see the red candle, it's very unlikely that now this red candle, by the end of this by the top of the hour, that we're going to get a green candle that suddenly just appears in like the final 2 seconds, which is what NASDAQ does, right? So it's very smooth. It's very smooth. It's probably one of the smoothest products that I've ever traded in my life. And I absolutely love it. All right. Raptor says alerts would be amazing, but they need support for Telegram or something like that, so that we can get them on the phone. I mean, look, you don't have to have everything on the same platform, you know, old school D, Gratty D over here. If you already have TradingView and you already have TradingView charts, just use that for alerts on your phone, you know. You don't have to have Topstep getting every single piece. Or, you know, there used to be a thing called the charting software that we used to pay an arm and a leg for back in the day. And that would be just basic CQG charting package. It was something like $500 a month. And it was like a subscription sort of thing. You couldn't just buy it outright. And then you would have data on top of that. And there was none of this like, oh, sim data, just pay for the eval. There was no evals. In fact, Topstep was the first one to invent evaluations for a subscription fee. That's peanuts. Usually, if you wanted to get back to funded back in the day, even if the prop firm didn't boot you out, like once you blew up their account, they would want something called the collateral, which ranged from 5,000 on a minimum sort of risk allowance, all the way up to 50,000 if you wanted to get back to funded and to have all of the risk controls and everything. So, you know, we need to stop being obsessed over having every single piece of tool on a single platform. You know, we are using computers that have the capability of running multiple platforms. So if you want alerts, just have them on TradingView on your phone. And then when it comes to it, use your Topstep to execute, right? That's how I do it. You know, I have all of my fancy tools on the CQG AMP, which is via MetaTrader 5 because, again, I'm a dinosaur. But then you have Topstep where I have things like volume, visible volume profile, and clean charts with just VWAP and a 16 EMA, and the DOM. So, you know, I use it as a execution platform. But if I need alerts, I will absolutely use TradingView as well. I have it on my phone, and I basically just pop in an alert, and it's like, oh yeah, great. I use Bookmap as well, just not, I don't quite have enough screen real estate for Bookmap today. When I'm not streaming, I will absolutely have it up when I'm on my laptop. But at home, I actually have 5 screens, and one of them is actually designated for Bookmap and another execution platform. Just Flow says, but my boxes are built from market close to 8. But market close is not midnight, mate. Market close is 9 p.m. my time. Or 10 if you're in Europe. Globex Open is at 11 after the 1 hour maintenance period, so I'm not quite sure what you're referring to there. All right, Bruno has given me how it works on the new dashboard. Here we go. So you go to accounts, so not billing anymore. It's accounts and then available add-ons. So you go to the depth of market bundle and you select that. So at the moment that's $34 per calendar month. But obviously if you're in Europe or the UK, you will probably have to pay more for that because we have value-added tax. And don't go complaining to Topstep about that. It's just something that all companies should really have for the European citizens. The VAT is something you have to charge. So yeah. And yet a lot of them don't. So yeah, a bit dodgy. Anyways, let's see what else we've got. So we have 9 minutes left, okay, to hang together. And actually, it's my mom's birthday today. So it's always going to be. Bruno says, all right, I have zero VAT where it reside. Yeah, yeah. I don't, because I still have these like combines for testing the bots and for, you know, when I'm over here and then I can't do my live. So yeah, they definitely have VAT on them now. But yeah. But again, I have a company, so I get that back anyways. Happy birthday, Mom. Yes. Do you think any prop firm will ever let you hold swing positions? No, and I'm not really interested in swing positions. If I'm going to swing something, I'm going to do it by options. But also, with the, okay, so here's the reason why a lot of people don't do the overnight margins. If you are, even if you're doing like sim accounts, there is this thing called the overnight margin, which basically means you need to have the full amount of the initial margin and the maintenance margin as the market to market is happening every single day. But in day trading, that intraday margin can sometimes fall to like nothing, like just like $1,000 per day. Per contract. And this is the reason why a lot of intraday prop firms, especially if you're trading some weird products, right? So if you want to trade, let's say somebody gets into a live account, because, you know, most prop firms these days now are starting with this live prop desk idea. And let's say you have somebody who traded up to, I don't know, 15, 20, 25, 30, 60 NQ contracts in their sim account. So they move them to live and they go, okay, yeah, you can do swings. We trust you. And this person puts in a, like, let's say they lose the plot one day and they're like, oh, I'm going to get my money back. I'm on tilt, live account, pressure. They go a little bit crazy, right? They have a Muppet moment and they enter a 30 lot NQ position. And they leave it on for the close and the overnight margin to kick in. So if I can find a calculator here, let's see what that would cost the prop firm in maintenance. So just to keep a position open, right? So let's see. Most people today will see that the 1 NQ full margin, one contract, 32 grand. And if you, let's say you opened up 15, so this is the amount that you would have to have as a prop firm per trader who trades 15 lots on NQ and wants to hold overnight. $500,000 per trader. So then let's say that a firm has, let's keep it small, 60 traders, 60 live traders. What is the capital that a firm would have to have for maintenance? Just for, like, not even like making money or anything, just for maintenance. So for 60 traders who all want an option to swing trade, so what's the general revenue that prop firms have? They pay out a few million, right? Some of the bigger ones obviously pay out more. But in general, a firm would have to have $29 million sitting there just for maintenance in the prop firm to handle the overnight margins for swing positions. So can we now move on from this idea that we're ever going to swing trade in prop firms because of this, okay? It's too much capital. It's too much risk. The prop firm is all about risk control, right? They're not going to be having 29 million tied into maintenance margin. They're not a hedge fund. They're not, you know, holding that amount of money doing nothing for them just to cover 60 traders who may on a whim want to trade with size for prop firms. So until we get to like billions in capital and you know, paying out people and not really worrying about it, and until they have most of the people being 7-figure traders per year, I don't think anyone can absorb 29 million sitting there doing absolutely nothing for them. So this is why, okay? People don't understand. They're like, oh, why don't you let me swing trade? Why don't you let me swing? This is why you have to, when you run a prop firm, you have to think long, like bird's eye view. What does this do for our risk? It increases the risk massively, right? And no guarantee that this person is going to be successful in swing trading because they proved themselves in intraday. So now what? We create another sim for them to test their swing trading, which is going to take longer because it's not intraday. So you have to give it a few weeks sometimes for the position to work out. So from a point of view of somebody who was doing like prop firm infrastructure at one point, it's just not viable. Like it's very, very expensive. So yeah. Paperback Place says, think it depends on the broker. Most overnight margins have decreased. They decrease and increase depending on whatever's going on. Now we have US government shutdown, but hey, let's have a look at AMP margins now. They don't decrease that much. It's not like we're suddenly going to go back to 1 NQ being 10 grand like it used to be when I first started. So let's see, AMP futures margin. Let's see what they say since we're talking. Here we go. So NQ. Again, what are you reading? Because this is actually increased even more from 32 grand when I looked at it 2 weeks ago. What sources are you reading? Where have the margins decreased? You know? Like, where do you get your details? I really want to know. Like, people could kind of spread slight misinformation, such as, you know, the margins have decreased. No, they haven't. Like, come on, guys. Like, let's do a bit of reading and actual facts checking before we start saying things on the internet that make no sense. So, yeah. Yes, what is the crime? I do agree. Live accounts reduce risk for the prop firm. Because if you put people in the live accounts, those that are profitable will then not be, they won't be rinsing out the prop firm for an extortionate amounts of cash. And I would argue that this has happened recently purely because of the multiple accounts. So obviously the industry has moved on to the, you know, firms offering 5, 10, 15, 20 accounts. Hey, why stop there? Let's do 100 accounts for the funny money. Yeah. I think that has actually brought many people into a situation where they are novice traders. Like, I actually did a video on my channel, Should You Copy Trade? If you want to check that out, please, it's underneath my this video here. So Topstep, I put my own YouTube channel underneath here. So have a look and find one of the videos from this year that says, should you copy trade? And I'm still in my old house there because this was a few months back before I moved. But yeah, it's a very eye-opening thing where people have dollars in their eyes and then they increase their upfront costs by immediately purchasing oodles of accounts. And then they do the same thing that they will do in one account. They blow them up. But except now, instead of that costing them 49 bucks for 50K and then another 49 bucks to reset, you've now spent upwards of $1,000 and $2,000 without actually having the skills and the emotional regulation to be able to stay in those accounts and make it viable. But for those of us who've been in the game for a while and we don't generally have too many issues, it might be a good opportunity. But then you also have this other now thing that where the industry is heading to with the live accounts. So now most reputable prop firms will try and push you into a live account if you're a profitable trader. So suddenly you go from trading, you know, 10 accounts, each trading 2 NQs without a loss limit, without any kind of controls. And that now they're pushing you into a live account, and you're starting with a very small amount of capital, 5 to 10K. On most other firms, Topstep is actually one of the few that will push you into a live account with up to 150K, if that's the biggest size of your XFAs. So they are, again, one of the options where, yes, you can actually go into a live account with some serious balance. But, some other firms are trying to improve that, but it's time in the game as well. So there are other firms that are doing really well, and they are promising. They're promising, but it's just the time in the game is nowhere near what Topstep has been. So, you have to weigh the pros and cons. And, when it comes to maintenance margins and live accounts, offsetting some of the risk to the firm, yeah, that is absolutely true. This is a business. It's not a charity, It's not like, oh, yeah, I have a free account. Like some people are like, oh, you have promos. It's like, hey, why stop there? Do you want us to start giving out accounts and not charge for them at all? Is that the game that we're in now? From a business point of view, that doesn't make any sense, right? So yes, of course, the prop firms have to protect themselves, and you don't want somebody who's ultra profitable to maintain 5 XFAs and to keep dragging out ridiculous amounts of money from it. You want them to be the speculator. You want them to be in the live account, because yes, of course, it's a risk. It's again a business, not a charity. So I don't know why people are so against that. I think that the prop firms, the way we do them now, are the best thing that's happened to the industry, because entry level into prop firms before was either through nepotism, you knew somebody and then they got you in, or through apprenticeship fees, which they were never cheaper than $5,000, and some of the bigger ones were 25,000 for training, and then you would get a funded account at the end of that. 25 grand. And now people are complaining about 49, 100, 140. Let's get real, guys. Yes, there are, obviously positives and negatives, right? So some people are like, the conflict of interest, but it really isn't, because it's just another business revenue. It's just a revenue. You can't attach some sort of saintly thing to the financial industry, because let's face it, we've never been saints in any way. We're all here to make money, and that includes prop firms. And yes, they will manage their business to make sure that they exist. What is the alternative? That they mess up the math on their risk of how many people should be in the live versus how many people are in the same funded accounts, and then what? They blow up and the firms don't exist anymore. So we don't want that, right? Right? So therefore, yes, it is the responsibility of the prop firm owners to make sure that their business model is sound. And we shouldn't have a problem with that. I don't know why people who know nothing about prop firm infrastructure decide to talk about it. And they're like, no, but prop firms make all the money from the fulcrum fees. Yeah, but it's one part of the revenue, right? You have some people who run ads on YouTube, and some of the channels are pretty big. Do you think that they don't make money from that? Just being, having ads on YouTube? It's ad revenue. Yes. It's nothing odd about it. Is that a problem as well for people? I don't know. Maybe I'm just a business person that looks at things from a business perspective, but yeah. So Bruno's saying they really let you trade 1 NQ with 1,000 account balance. So no, you need a minimum account balance of 1,000 to open a position. But Bruno, here's the thing: if NQ goes against you, that 1,000 goes like this. And then, yeah, they allowed you to open up 1 NQ with 1,000, but should you? Probably not. So again, just because you should doesn't mean, just because you can doesn't mean you should. Yeah. The margin also changes without a warning. Yeah, brokers have AMP can change their margin however they want. whatever. If there's a sudden event, they tell you they have changed the margin. Yeah. And then when they readjust it, they're like also telling you late, right? So let's say when Trump was speaking, he would start speaking and immediately the margins would just increase. And then after the fact, you get an email from AMP and going, yeah, by the way, the margins have increased. Like, oh yeah, but it is totally within their, their fine print. Totally within their fine print. What is the crime? 100 accounts as the prop firm printing money? Not necessarily. If they got the math wrong with how much payouts they are giving out, because remember, a lot of prop firms, they pay out millions and millions in performance fees. That's what they are, right? They're from sim accounts, but they're performance fees. So yeah. Yeah, exactly. Yeah, people liquidated. Deeyana, the book map is useful with gold to see the areas where it can go, whether you let it go or not. So here's the thing. On Bookmap, you only have 10 up and down contracts, so it's a limited view. But if you go back through the heat map, you can sort of see where they were. So in a way, yes, it's useful. But to be honest, I would more combine the two, look at time and sales, look at Bookmap, and Dome as well, whether there is an imbalance. So one of the biggest things that I've noticed on, probably across the board actually, is that when you have a big imbalance on the Dome, in gold that gets hunted, especially when it's to the upside. So let's say you suddenly start seeing somebody with like 120 contracts up at 3980. That is going to get hunted. So you know that they're going to go there first before they do anything. It's just another layer of, to me, it's a part of my OODA loops, observe, orient, decide, and act. It's not a core thing. Like I wouldn't just stare at the Dome and go, right, where are they? But it's a useful thing along with the situational awareness that goes on with everything that I do. Yeah. Yeah, Bruno, you're right. Yeah, exactly. It's like, whoops, you were liquidated. Oh, by the way, we went a little bit over, so now you owe us money. Yeah, that can happen in futures. You can lose more than your stake. You know the risk disclosure that we posted in the beginning of the stream? Yeah, please familiarize yourself with it. The amount of times when I had my risk disclosures on my channel, some people were coming to watch the trading video and they see that and they go, oh man, I needed to read that disclosure like way before I did this stupid thing. And that's why we have risk disclosures, to make sure that people fully understand the risks of the market, But prop firms, obviously, there's a mitigated risk to you as well. Because if you end up blowing up an account and going over into the negative, prop firms absorb that loss. They will never, Topstep is never going to come to you and go, hey, you lost us this amount of money in Topstep Live. Give me. They would just go, ouch, oh well, we continue, right? And that's also the role of prop firms, to mitigate the loss to the trader. Something that's not talked about enough. Anyways, guys, we've spent enough time here. I don't see anything that I want to trade on these particular products. So I'm going to wait for a little bit later today, if at all, because I think I'm probably going to be spending the day with mom again, and we might want to go do a birthday lunch or something. So I might be out of the house to celebrate her 78th birthday, but she doesn't look it at all. She's amazing. Thank you for being here with me. I really appreciate it. Like I said, this is my social. So thank you for hanging with me while we talk shop. And, today we were just setting the day up to see what could happen and some levels, and we'll see how all of that plays out a little bit later. I will be here tomorrow for another episode of the Euro trade, and also on Thursday. Until then, please be mindful with your accounts, respect them, lock out those risk settings, and don't let yourself go with the flow in the emotional dysregulation if things don't go to plan immediately. So don't be like that little 3-year-old throwing the toys out of the pram going, it didn't work. So use those risk controls to prevent you from going full Muppet on days when the plan doesn't quite come together like you imagined. That's all I have for you. This was the Euro Trade. I'm Marcus Stalker D. Have a lovely day. Take care.